Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, November 12, 2008. We begin in Japan, where household confidence plunged to 29.4 in October from 31.4 in September, bringing the index to its lowest level since records began in 1982. Consumers' moods are being pressured by the prolonged global financial turmoil and a weakening labor market. In Australia, the Westpac Index of Consumer Sentiment increased 4.3% in November, a welcoming result following an 11% drop in October. The boost in confidence follows the RBA's strong rate cuts of 1% and 0.75%, which have lowered the variable mortgage rate by more than 1.5%. In addition, a stimulus package helped to boost consumers' attitudes. The wage price index in Australia rose 0.9% in the third quarter, a slower pace than in the second. On the year, wages were up 4.1%, also a deceleration from the second quarter. An easing of wage price inflation should help give the Reserve Bank of Australia more confidence in their recent rate cuts. The Aussie-US dollar pair fell for a third consecutive session to start the week, reaching the 0.6350 level. That is a 560 pip slide from Monday's high near 0.70. The pair hit an intraday high following its releases today, but was pressured by risk aversion the rest of the session. The Eurozone saw its industrial production fall 1.6% in September, wiping out the gains from August. Production is now down 2.4% on the year as companies cut back output in response to weak demand from home and abroad as a result of slowing economic activity. The data means that industrial production has entered a nasty downturn, which may extend into the coming months. In the UK, the number of people claiming unemployment benefits rose 36.5,000 to 980.9,000, the largest jump in almost 16 years. The forecast had called for an even bigger increase. It was the ninth month that unemployment rose, and September saw its figures revised higher as well. The ILO unemployment rate for the 3 months through September rose to 5.8%, the highest it has been since the early part of 2000. Total number of people without a job rose to 1.825 million. The euro-pound pair soared to a new record high today as the Bank of England projected the economy will contract into the next year. Comments by Bank of England Governor King show that the bank is ready to continue to cut interest rates in order to help economic growth, as inflation fears melt away in the face of slowing economic activity and falling commodity prices. The pair rose 260 pips today to test the area around 0.8410. Global stocks were lower today as the risk aversion continues to dominate the markets. With the pound already pressured by its fundamental news, another bout of unwinding of carry trade caused the pound yen to slide 1,000 pips in today's session. The pound accelerated its decline that had been more modest the last 5 sessions. It fell below the psychological whole number of 150, finding support only at the 141 level. Most of the fall came during the New York session, where stocks were down, which increased the unease amid investors. The pound-dollar pair slid almost 500 pips from its high near 1.5480 to find support at 1.4895. With the bank projecting possibly a year-long recession, traders are dumping pounds in greater numbers, accelerating the pound's losses. U.S. stocks sunk today as investors continue to fret about the ailing financial and auto sectors. The Dow Jones Index was down 400 points at today's close. Treasury Secretary Paulson unveiled the latest details of the government's rescue package. He is shelving the original plan to buy troubled mortgage assets and will instead focus on giving money to non-bank financial institutions and helping to unclog consumer finance. Still, the markets are not impressed, and the dollar-yen pair, which follows equity sentiments closely, slid as much as 300 pips from high to low and was trading near the 95 level as of 3:20 p.m. Eastern. And our final pair for today, the US dollar-Canadian dollar pair, jumped 350 pips as the risk aversion continues to hurt the loonie this week. Oil prices came down more than $3 to trade near $56 a barrel. Tonight, New Zealand releases data on retail sales, Japan posts its corporate goods price index and industrial production, and the Aussie releases inflation expectations. Overnight, Germany reveals third quarter GDP, and Switzerland releases its producer prices and ZEW economic sentiment. Tomorrow, the U.S. posts its weekly jobless claims, and both the U.S. and Canada reveal their trade balance figures. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.